All right. You are welcome once again to the second video in this series, Introduction to the Forex Market. Well, you must know it's not just the Forex market. We're talking about the bulk of things that we'll be learning here in the Rich Vision Academy. At the end of this training, you'll be able to use these things to be able to trade not just the Forex market, but the stock market, the commodities market, just like cocoa, wheat, gold, precious metals like gold, like silver. You know, you can use it to trade oil and gas. You know, a lot of things. I'm going to be showing you all these things as we go on. But please, I want you to take notes. If you have not watched the first video, I encourage you, go back, make sure you take the first one, then you go before coming into this lecture. Once again, it's your friend and partner, Olusola Popola, chartered accountant, investment advisor, and a life coach. And I'll be taking you through this session on Introduction to Forex. In the last video, we talked about you know, the market itself and everything. But today we're going to be looking at, in this video, we're going to be looking at the things that move this market. What makes this market to move? We look at the flow of the market. We look at the flow of the market. Because, you know, most of the time you just see this chart and everything. You see things on the chart, you see some things going up, some things coming down, and you say, what is this? What's it all about? It doesn't mean, for some of us, you are intrigued. Some people will just, I don't understand what's going on, so I don't pay attention. But after this lecture, you'll be able to appreciate this more as we go. So in the last lecture, we talked about the market as a memory, trading range. We talked about the ranging market. We talked about the trending market. We talked about the support and resistance. We'll be going into deeper things in future lectures. But for this lecture, we are going to be talking about the flow of the market, the intermarket analysis in the forex market and the capital market, then how you prepare for a trading day. Then we talk about introduction to online trading. Then we talk about fundamental analysis. These are the things we're going to be covering in this particular aspect. All right. So I think we are set to go. So here we're going to look at the flow of the market. What do we mean by the flow of the market? Now, when you say the flow of the market, you are looking at what makes those things, the what we could call the candlesticks. What we call the candlesticks. Sorry, this was where I was going. All right, what makes why will this thing just go up, down, and you can't explain what happened? Now, the simple thing, this is what we call the flow of the market. Now, in understanding the flow, I told us something that you see these things, and I'm going to for those of you in the academy, you are going to have a place where you're going to download something we call the Candlestick Bible. You know, it's a book that talks about this candlestick pattern, what they represent, and everything like that. Now, if you look at this is what they call the candle. A candle they are called Japanese candle. You see, some when it's this color, you can have it in a variety of colors. It's going up, it's coming down, it's going up, it's coming down. But this is not what we are focusing on today. We are looking at what makes the flow. Now, I'm going to make an illustration here. Let's do an illustration, and I want you to pay attention to this very well. Now, imagine yourself flowing down a river, only you don't know that you are. You do ever notice that when you move in one direction with the flow of the river, you move rapidly. When you move in the other direction against the river, you move slowly. Now, in fact, when you go in that direction, you seem to put in a lot of effort. Now, let's look at it like this. Life becomes a struggle when you flow against the tide of the river. Now, let me explain this further. I'm trying to see the best way to illustrate this. Now, two individuals, they came and they said they wanted to swim. They want to swim. There's a river flowing from north to south. The river is flowing from north to south. And it's not that it's falling like this, it's just a little bit steppy. Now, and you see the river going with its speed. Now, two persons came together, and one has been an Olympic swimmer. As a matter of fact, he was born in Ijo land in Nigeria, where when they are born, they put them in the waters. He knows how to swim. His father sent him to the Olympic school of swimming and everything. So he's a great swimmer. Now, let's call this guy Chooks. Let's call him Chooks or something. Now, there's another guy. Let's call him Babs. Now, Babs was born in the north. He's never seen a river before. He has the biggest river he has swum in, or the biggest water he has swum in, is the bathtub water in his house. All right? So, these two now, they were asked to swim. And this fellow Chooks looked at Babs and said, "Come on, guy, I'm a professional. I can't swim in the same direction as you are swimming." Then I said, "Okay, you take one direction." And Babs looks at it and he saw that, okay, the water is flowing this way. He decided, okay, I'm going to swim this way. But Chooks looked at it and said, "I'm a professional. Is it not 100 meters? I'm going to swim faster." So he decided to face the opposite direction. Now, on your mark, set, go, boom. They jumped into the water. Do you agree with me that whether Babs knows how to swim or not, by staying inside the water, he just needs to be shaking his body just so that it doesn't go under? Do you know that the current of the water will carry him? He will just be going with the current. He just needs a little effort. He doesn't know how to swim, a little effort, but the current of the river is going to carry him. Now, but this other guy, who is a professional swimmer, who is facing swimming against the current, he will use breaststroke, he will use butterfly, he will use all the styles that he knows. Life becomes a struggle for him because the current of the river is flowing this way and he's swimming against the current of the river. Now, why have I illustrated this? One of the laws that you will learn in Forex or in the market, in trading the online market, is never trade against the trend. The trend is your friend. I want you to write that down. Never trade against the trend. The trend is your friend. So it's like you are swimming. You in the market. We said we have upward trend. If you remember that, we said we have the upward trend where the market is making higher highs and higher lows, higher highs and higher lows, and the market is going up. And then we have the downward trend where we have lower lows, lower highs, lower lows, lower highs, and so on like that. So when you are in an uptrend, please, I want you to pay attention to this. When you find yourself, the market is trending upwards. Let me give you a picture of this. All right, let's have this picture here. The market is trending. When we say it's trending upward, this is a higher high, higher low. This is higher. This is what we call the high. When it goes up like this, comes down, goes up like this, comes down, goes up like this, comes down. So when it goes up like this is a high, this is a low. This is a high, this is a low. This is a high, this is a low. So when this high is higher than the last high, this is what you call an upward trending market. In an upward trending market, what you should do is you buy low and sell high. Write that down. In an upward trending market, you should be looking for opportunities to buy low and sell high. You are not selling in an upward moving market. If the flow of the market is upward, it's going. You want to buy at a lower price and wait for price to go up, and then you sell. You look for the low price again. Take for instance, if I am here now, I want to buy here and sell here. I will wait for the market to do what we call a pullback or a retracement. When the market pulls back a bit, it comes low like this, and then I buy here again, I go up here and I sell. I wait for a trend pull back again. It pulls back, and then you sell. You buy here, and then you sell. Anytime you buy low and sell high, you buy something for $20 and you sell it for $30. You make a margin profit of $10. That is, you bought low and you sold high. I hope you get that. Now, that is an upward moving market. That is, when you say the market is bullish, when the market is bullish, I explained the bulls and everything. Go watch the other video. Talked about moving upward. So in a bullish market, you buy low and sell high. Now, also, when you are in a downward moving market, now this is a downward moving market. You can look at this. You can see this. This is what we call a downward moving market. Downward moving market. As it's moving down, you have the lower lows and higher lows. Now, this high is lower than this high. This high. And then the next one, you see that this high is lower than this high. So you have lower highs and lower lows. This bottom here this one is lower than this. This is lower than this. So when you have lower lows, lower highs, that means the market is in a downward trending market, what we also refer to as a bearish market. So what do you do in a bearish market? You simply sell high, and buy low. You sell high and buy low. In a bullish market, you buy low and sell high. In a bearish market, is you sell low and you sell high and buy low. And most of the time, where do you want to buy? Where do you want to sell? Remember, in the last lecture, we said you should always sell at a resistance and buy at a support. You sell at a resistance. Now, if you look at this diagram very well, now when the price got to this level, you can see it, we can say this is a resistance. So if I sell here, I wait for to come down to a support to buy. I buy at a resistance, because when a market is trying to go up and it's stopped, it's pushed down, we can call that a resistance. A resistance is a place where the market has touched several times. We look back into history, but that's not what we do. I want you to understand the flow of the market now. So when it goes up like this, I want to sell at this price and then come here to buy. So that means if I sell at $100, I gave you an illustration of somebody who went to the market to buy something. The marketer said, okay, I have this product. I'm going to sell it to you. I'm going to sell this thing to you for $100. I want to buy this iPhone. How much are you selling the iPhone? It's $500 or $1,000. Okay. Do you have this color? He said, I don't have this color, but I have it in our other store. And then it sits you down. While you are seated, he has agreed $1,000 with you. He now goes out to look for where he's going to get the phone from his colleagues. He'll go and get the phone maybe for $800 and bring to you. What has he done? He sold high and then went to buy low to make a profit. He sold high and went to buy low. Now, you probably took that phone, you bought it $100. Maybe you are like, for those people in Nigeria where you have Computer Village, maybe you bought this phone $100 or $1,000 in Computer Village. Now, you now travel to the north where they probably sell this same kind of phone for $1,500, right? So what have you done? You bought it in Computer Village for $1,000. You bought it in Computer Village for $1,000, and then you go up north or to another place and you go to sell it for $1,500. You're going to make a profit of $500. Is that not? You make a profit. So if you decide to sell, so in this market, you can decide to sell high and buy low, and you will make profit. you sell high and buy low. It doesn't matter. Whenever you come into the market, you're able to identify the support and resistance. If you are selling, sell high and buy low, you make your money. You buy low and sell high, you still make your money. But knowing the right time to enter the market is a major challenge for most traders. Your ability to identify where is the support, where is the resistance, so that I can buy low or sell high. I'm going to show you that. We'll be showing that in several other lectures, and we'll be using the contemporary terms now, where we'll be having maybe the bullish order blocks and everything in some subsequent lectures. So I hope you understand that particular flow. Now, having understood this, remember I told you, write it down. Never trade against the trend. The trend is your friend. Always identify which direction is the general move of this market. When you're able to identify the general direction of the market, then you now make your way to decide on what to do. Okay, I wanted to show you this again, but while that is opening, let me go on to let's look at some other things. All right, so here we have what we call intermarket analysis also. If you want to be a good trader, you should be able to understand the relationship of different markets. The Forex market does not just work on its own. The stock market does not just work on its own. They relate with themselves. So the effect of fluctuating interest rate, what moves the market? What makes the market to move in a certain direction? Just an example now. If they said, let me give you an illustration. If governments decide, let's say, depending on the government you are talking about, let's say Nigeria's central bank policy is very good and is very strong. Let's just assume that. Now, if central bank, if they decide that they want to increase interest rates, that is, in simple terms, let me just put it this way, that if you go to the bank now, the cost of borrowing, maybe when you want to, as business people, all businessmen borrow money a lot. So you want to borrow money from the bank. You want to get $1 million and something or whatsoever. Let's say you want to get $1 million. Now, the interest rate was 5% when maybe in January. Now, you are maybe in the month of, maybe you are in the middle of the year. You now want to get another loan. You've paid back the former loan. But when you want to take this next loan, the government, you heard that government is increasing the interest rate. Now, let me ask you, when government increases the interest rate of borrowing, that means the business person is going to collect the loan at a higher cost. What do you think is going to happen? The cost of production, everybody that is getting money from that bank or from the government, they are going to increase their costs of their product. Raw material cost is going to increase, labor cost and everything. Now, because just one statement that interest rate is increased, boom, everything else begins to increase. Now, what happens? The moment everything increases, the production cost will increase. And once production cost for a company increases, that means, and you can increase costs. Costs can increase, but you can't just increase selling price anyhow because of competition. All right. So because of the interest rates that increased, your cost of production has increased. Now, once your cost of production has increased, what will happen to your bottom line? It will reduce your profitability. The amount of profit you are going to be making will be reduced because you can't put the same cost on your customer immediately like that. So, because the costs of production increase, profitability will be reduced. And because profit is reduced, what will happen to the stock market? That means the value, maybe we are not going to be declaring a lot of dividends in the market and things. So value per share of things could go down. So you now say, government increased rates and prices of shares went down. Government increased this. So there are a lot of other things. It could be, remember, when OPEC is saying that they are going to limit the production costs of some countries. or they put a ban on Libya, they put a ban. So what happens? All the countries have a quota of oil that they are bringing every day to the market, millions of barrels. Now, and the world is consuming it. But Libya has an issue, is no longer bringing it to the market. Oh, Nigeria has an issue. They are not meeting up to their production quota. What will happen to the international price of oil in the market? The international price of oil will definitely go up because supply is reduced. There's lower supply and everybody still needs it. So people will be ready to buy it. So now, because the price has been has increased, cost of production nationwide, countrywide, worldwide, cost of production will increase. And what will happen? Globally, the markets will be affected. So you see the shares dropping. You see shares dropping because earning per shares will now reduce. I'm just trying to use something that you will understand easily. You get it? Now, that is how policies affect market. Now, inflationary expectations also. Oh, when inflation is increasing, well, we're in a wonderful period now. As inflation increases, what will happen? A lot of costs too will increase. So the economy will be downwards and prices will be falling. Now, something that you should know is this: the stock market and the forex market, they almost work in opposite direction. At times when stock is going up, you see price of forex going down. When forex is going down, you see that price going up. So it works like that. So also, there's a broad relationship between index representing various markets around the world. That's a factor that determine the direction of the market. So, we have different index. We have like in the US, we have the S&P is an index. S&P is an index. S&P 500. We have the Nasdaq. We have the Dow Jones. We have the FTSE 100 for UK, and so on like that. Now, like this market, the prices of the prices of this stock, of these indices, when you talk of like S&P 500 now, is a combination of the top 500 companies in the US, the topmost 500 companies. So you see, like, it's a basket. When you talk about the Nasdaq, you're talking of technological stock. So when their share price is going up, the average, the index, that means is an indication that, the economy is booming very well. The economy is booming. So what will happen? A lot of people will want to invest in that economy. Do you understand? So these are some of the things that move the market. A lot of intermarket play. Now, some of the factors that we consider when we are talking about intermarket analysis, we talk about the domestic broad market indices to one another, market sector to broad market indices, individual stock to broad market indices, the relationship of price, time, and volume, then movement in interest rates, and so on, treasury bills, bonds, and everything like that. They all affect the movement of the market. And that is why, as a trader, you should pay attention to some of these things. These are some of the things that a lot of people don't understand as far as trading is concerned. They jump into trading just thinking it's taking the MT4, buy, sell. You should have an understanding. Now, when you are preparing for a business day, when you are preparing, you want to start trading, you don't just pick up your phone and say, the candle seems to be going up, let me buy, let me sell. There are some fundamental things that you need to look out for. You want to see what is the market saying? What is the market saying? For you, now, for those people that be trading the stock market, you will need this Bloomberg a lot. Bloomberg.com. Every time I have it on my system playing, you'll be hearing economic news, what is going on in the market and things. And the news in the market is so fast. Bloomberg catching. I tell you, if there's oil spillage in Nigeria, before the Nigerian market knows about it, Bloomberg has said it. Before the Nigerian market, before the Nigerian news starts to say it, Bloomberg is already announced in Bloomberg. I tell you, it's just like that. The way information passes in this fast, because there are people in Nigeria that are defending the interests of the rich, so they communicate as fast as possible to secure the portfolio of great investors. Now, you as a trader, one of the tool that you'll be needing is this particular one, the reports that comes out on daily basis. So look at this one. We have my Forex myfxbook.com/forex/economic calendar. Now, this news come out precisely every day. You will see news that are coming out of in this fashion. Let's just go on that side. Sorry, I think it was when I was okay. Let me put it calendar. We have different calendars where you get the news from and things, but this is what most traders use, my FX book. Now, in this place, you see different news that is coming to the market. And if you are a trader, you want to know before the start of the day what news will be coming, so that, because when this news comes out, the news are categorized in 3 different ways. We have the high impact news, the low impact news, and the medium impact news. When the news is of high impact, you see it in red. Most of the high impact news, you check it out, guys, because this has been configured to meet our timing. Everybody can set their own timing. This has been configured for West African time, GMT +1. So you just, in whichever country you are, you can adjust your timing. Now, in the morning, by the time it gets to the afternoon, like, because we have the daylight saving, because we have what we call the daylight saving period and things like that. The daylight savings, when at times the market opens at 1:30 and at times it is 2:30, based on the daylight saving period. All right. So now it opens, the US market opens by 1:30 in a day. At times it will be some certain period in the year is going to be 2:30. But from this period, take for instance a trader, we want to try to avoid trading, especially when you are just starting. You want to avoid trading in this period because it's high impact news. High impact news. It can spike the market. It can push the market drastically. And if you are in the right direction, oh, good, you make good profit. But if not, it can make you lose your portfolio. Are you getting? So once the news is over, you just want to wait well for this news. By 3 o'clock, that's when most traders that don't want to fall into the volatility period of the news, they will start looking at, okay, I'm going to start trading by this period. So you come here when the effect of the news has gone down. Now, take for instance, now look at something. Each of these news comes at this. You see this one, August 23, 2:45. If you go the next year, exactly this same time, no failing, this same news is going to come out. Exactly the same time, this same news is going to come out 10 years from now. Exactly. It does not change. So you will do yourself good so that you don't you say, oh, the moment I entered the market just went up. It just went down and it hit my stop loss immediately. Well, unfortunately, maybe you entered when there was news in the market and the market was volatile. So you want to enter the market when the market is cool, when there's no much aggression in that market. So you enter the market for that fellow, you can enter the market at 3:30 and so on like that. So look at the news for tomorrow. The news for tomorrow, for the next day. Now I'm talking of this next day, which is Thursday. Now, the first news is coming out is the Japanese news. It's affecting the Japanese yen and things. And then we have the US news, and is an high impact news also coming up later, about in 3 hours time from now. So, and then you see the market is quiet until the next day. The next day, look at high impact news coming up again. High impact news coming up again. And so that's how the market goes. Every news is already stated there. So you do yourself good as a trader. Always check that before you go into the market, there's no high impact news around the corner. There's no high impact news around the corner. So now there's something that I should have taken you on, that I should have told you before now, that there are the markets. When you see the market, when they say market is open 24/5, when we say 24/5, that means 24 hours, 5 days in a week. 24 hours, 5 days in a week. The market, as far as the Forex market is concerned, the stock market, they trade only from Monday to Friday. But the crypto market trades over the weekend. So now, when is the timing? It is divided into three major areas. The market is divided into three major sessions. I think there's a place we're going to cover it, but let me quickly say this so that I just have it on record. I've touched that. So write this down. Three major trading sessions. We have what we call the Asian session. It depends on the part of the world where you are listening to. The Asian session, because of the way the globe is, now, maybe in your own country now, you are going to sleep. In some countries, maybe like China, like Japan, they are just waking up. They are just waking up to start business and things. So those countries, those ones are the ones trading the Asian session. A country like Australia, they are just waking up now. They are going into business while you are going to sleep. So the traders there now sit down to start trading. So that is what we call the Asian session. The Asian session starts from, depending on the time savings again. Remember the time savings. At times it could be 9 o'clock, it could be 10 o'clock. But depending, now it's about 10. Once it's 10 to 10:30, the other markets are closing. The US market is closing. So let's say the Asian session begins between 10 to 10:30, and it's going to play till the next morning, just like 12 hours business, almost like 12 hours business work. So by about 8 o'clock thereabout, 8 a.m., that market is closing. Let's say about 7:30 or thereabout. That market is closing, allowing for the UK session to start. The London, we call it the London session. So because the London session coincide, it's kind of, it's for those people in Africa, it's almost maybe like an hour difference and things like that. So the London session starts by 8 a.m. as it may be. You can just figure out those timings, just to give you an idea. So it starts by that 8 and runs till about 4 p.m. depending on where you are. It runs till about 4 p.m. or thereabouts. Now, within that period, also the US session, the United States session, starts at about 1:30 or 2:30, depending on daylight savings. Again, I always say that it starts at about 1:30 or 2:30, and it will roll till 10 p.m. So as it's going to 10 p.m., the Asian session starts again. So it rolls over like that. So you have the Asian session, the UK session, then the US session, the Asia session, the London session, the US session. These two, because these are the biggest markets. As a matter of fact, US is the biggest market as far as Forex is concerned. So you want to know, for us, for the people in Africa, you are so fortunate that you are able to trade the London session and the US session. There's what we call the market overlap, which is between that when US session is on, the London session is on, and the UK session is coming on it. At that period, the market, there's so much liquidity in the market. When we say liquidity, that means a lot of people are trading. Everybody's awake. US people are awake. They are going to the stock market. They are buying, they are selling. Everybody's just, there's going to be a lot of, so you can make good money there if you are careful in your trade. All right. So I just thought to just put that quickly there. So wow, I know we finished this session here. All right. So this is the major part that you need to look at. Then and one other thing that you need to also have is in your, when you are preparing for the trading day, there's what we call the Forex calculator. You must be able to calculate your lot sizes and things like that. I'm going to talk more on that when we start our money management runs. All right, money management, we're going to be talking about this aspect. So you are going to look, how much money do I have, what is your liquidity run and everything, and you try to fit your trade. Don't just immerse yourself in trading. Well, it's easy to say, but when you are in the real field, you see that you just see that you are just dug into your you are stuck into your trade just like for the whole day. But then as a trader, try as much as possible to have your own sessions where you where you can relax and then do some other things. All right. Okay. So now, quickly, I'm going to talk on what we call the we're going to be looking at the online market, the two essential things that move that affects this market. Now, online trading allows individuals to actively participate in buying and selling of Forex in any major stock exchange market. Of stock. Forex is not traded on the stock exchange market. It's a Forex market. The Forex market is even way bigger than the stock market. All right. So the trader is linked up to the market through a software called the platform. Now, that platform is what we call the MT4. In the next lecture, we are going to be doing practical. We are going to be going practical, explaining the nitty-gritty about the MT4, both for your mobile and on your laptop. So, before you go into the next lecture, you must make sure that you have your phone or your laptop, because it's going to be more of a practical session. All right. So here, a platform is a software you will actually use to make trade with. Your demo account is a platform. When you go live, you'll be using the same software or platform for your live trading and so on. So trading in the global market is real time and hence requires proper analysis so that you can take care of your money. Now, there are two ways you carry out market analysis, two critical ways. Although people arguably say there are three. We have fundamental analysis, technical analysis, and then we have the market sentiment also. But let's talk about these two major ones, the fundamental analysis. What are fundamental analysis? Fundamental analysis, they focus on external factors such as interest rate. I was trying to explain government increasing interest rates and things like that affects the market. So three main factors that impact the stock or the Forex market movement from the fundamental perspective. We have what we call the interest rates, we have the economic indices, and we have geopolitical factors. It could be natural disaster, it could be crisis in one country affecting, just look at when the Russia-Ukraine war. Do you know that it affected? Russia happens to be the largest wheat supplier in the world. Since the war started, cost of wheat has gone up worldwide because the major supplier is having an issue. So a lot of people that are having to do things with wheat, they are going to be affected. So these are some things, fundamental analysis. So you can just read this up again. Now, within the fundamental analysis, there are some key players. That move this market. So, as at the time of recording, one of the significant role of government is to operate economic policies that will ensure healthy economy for their country. So, in most countries, the execution of policy is one of the central banks or its equivalent. In today's global economy, the following bodies and personalities are most significant. Now, let's talk about, like, when you talk about the United States, there's what we call the chairman of the Federal Reserve. Federal Reserve is like what we call your central bank in most countries like that. But in the US, as at the time, let's be sure, I know, I think I didn't update this. Let me see. If you go online, you can see who is. Let's just take a look quickly. I don't, so that anyone that is watching this at a later date, let's just be sure. If we go on Google and we say chairman of Federal Reserve, we are not looking at his salary. We're not interested in his salary. Chairman of Federal Reserve, right? That's the highest financial body in the United States. His name is Jerome Powell. You can see him. Now, you see, you look at this guy. If this man makes a little speech, when you hear that Jerome Powell, as at the time of this recording, that is going to make a speech somewhere, and you see it in your economic calendar, please stay out of the market if you don't have the expertise yet. They are so powerful that their words are powerful in the market. When they talk, the market responds. Such also is what we call this organization, we call the FOMC, Federal Open Market Committee. The Federal Open Market Committee. This is another powerful body that when you see them in the news, you want to be careful. Then we have the Bank of England. Then we have the European Central Bank, the Bank of Japan, and other central banks. But these ones are the major ones. When these people, when you hear that they are going to be making speech or they are going to be making a policy, you want to stay out of the market, let them do their discussion, then you come to trade after that. So economic indices, we have a lot of economic indices that affects the market, such as we have key economic reports like employment report. Employment report is one very key report in the United States. When this report is coming out, I tell you, it's at times we call it the non. There's one we call the non-farm payroll, which comes out every first Friday of the month. So when these reports are coming out, traders are very careful, because when the report is good, it will strengthen the economy, the dollar. When the report is bad, it will affect it. So people want to be careful when you are in the market. All these things. We have the CPI, the Consumer Price Index, the PPI, Producers Price Index, GDP, Gross Domestic Product, and so on. So all this indicate this economic report affects solidly the movement of the market. Now, also we have the effect of geopolitical situations. There's a war in one country, there's an earthquake somewhere, and things. This affects the movement of prices in the market. So, ladies and gentlemen, at this, we have to continue on the next in the next video to talk about the other. We have to go practical in that video, talking about how to begin to use this platform. This part of the video is necessary because it will help you to be familiar. Now, when you are listening to the news and you hear FOMC is meeting, you are not going to be listening to it as a stranger. Now you know, okay, FOMC. You hear Jerome Powell, you say, okay, that's the chairman of the Federal Reserve. All these things makes you a professional trader. So you are not just like every other person who is trading the market. So, ladies and gentlemen, I'm expecting you on the other video where we'll be going practical, explaining the basis of how to take trade, understanding the MetaTrader 4 and how to take trade. I can tell you from the next video, you can start picking trades in the market. But go over this video again and understand this process. Once again, I hope to see you at the best side of success as you continue your journey in this skill acquisition with Rich Vision Academy. It's your friend and partner, Olushola Popola. Thank you.
Waking up at dawnlight, breaking through, chasing dreams, no time to lose. In this race we strive and grind, motivation fuels the mind. Gonna rise up, we won't fall, breaking barriers through it all. Step by step our journey's clear, success is closer, don't you fear. Challenges we face headstrong, in this rhythm